Welcome everyone to Global FX Radio, Voice of Forex, Daily FX commentator, Andrew Spant, and YouTube special edition, the FOMC rate decision, just came out about 15 minutes ago. I have to say I think Bernanke finally did something right. The FOMC, the Federal Open Market Committee of the United States, did not lower rates like some morons were predicting. How the Fed would do that, given the inflationary concerns out there, would indicate that the economy is collapsing and they have no other means to help. They have a lot of other things they could do. One of the things I've been suggesting is lower the discount window. Make the discount window the same as the overnight Fed funds lending rate at 2%. That might help the banks out a little bit, especially the bad credit ones. So there's certainly other things the Fed can do. We await the AIG story. AIG, now the rumor is AIG needs $90 billion. Come on. AIG is big enough to fail. Everyone's prepared for the worst now. Ever since Bear Stearns was the wake-up call to all these executives that you better plan for the what-if. So I think that people are prepared. You know, last I heard, when you go into bankruptcy, they don't close the doors to a company. You can still work there. They can still operate. So they could declare bankruptcy and still operate and sell off assets to get out of bankruptcy protection. But bottom line, or Chapter 13, whatever they need to do for Hank Greenberg to get on TV and say, it's America. It's too big to fail. Give me a break. The pompousness of that guy. He's the crook that started it all in AIG. Hank. He sold all. When he left the company, he put all the stock in his wife's name so he couldn't be sued and they couldn't get his money. And then he sold stock. The guy's got billions. He raped and pillaged that company for decades. For decades. All right, we're looking at the euro-dollar pair right now. Enough of my rant. Bottom line is this: the dollar gained strength as it should. The market was predicting that the FOMC would be cutting rates. That would have been dollar negative. The fact that the FOMC held rates is a dollar positive event. As we look at the hourly chart on this euro, it does look like it's rolling over. I got to tell you one thing about any chart you're reading, one thing about trading: if something doesn't make sense, if the dollar's rally to you doesn't make sense, and you're still fighting it, you're crazy. In trading, if it doesn't make sense, one of my rules, you go with what doesn't make sense. Follow the yellow brick road. Ugh. Follow the yellow brick road. If things don't make sense, you got to go with what doesn't make sense. So look at this euro. It looks like it's going lower. We took out previous day lows. That was a big move lower. That's scary. That looks terrible. So again, looking at this euro-dollar chart, I got to tell you, we had a monster rally, and now if you measure the move, right? We measure the move. So whatever we went from 139 in the euro up to this 144.80 level, okay, we take out the lows, say hello to 135. Oh, yeah. So the euro dollar is certainly not looking very good. The daily chart we'll look at also. And again, I'm doing this very early. The time it's September 16th, 2008 at 2:38 p.m. Eastern. So we see here the euro dollar got right up to that level we thought it would. Look, it went to the 20 exponential moving average, 145. And now we're taking our previous day lows. This is very bad. Muy malo. We go under 140. We take out the bullish engulfing bar from the doji hammer. That would be very negative. We could retest 139. So look at this euro dollar. It looks very weak to me. And the macro, listen, the U.S. economy is doing terrible, so it doesn't necessarily make sense to me that the dollar should rally, but it is. And if it doesn't make sense, you got to go with what doesn't make sense. And the dollar's going to continue to rally. Listen, the Fed's keeping rates unchanged. That's a bullish scenario. Dollar yen, the monster hammer premium. We bought this right on the gap down premium. Go premium, baby. We bought it at what, 104.65, I believe. Yeah, I bought it 144.65. We sold it though. We got out. But again, breaking through this whole downtrend channel. This looks like it's going higher to the moon, baby. Oh, do we buy that great? It's rallied. Dollar yen is now rallied 120 pips from the FOMC rate decision. These idiots gapped it down. Look at the stock market exploding right now. Taking off. Stock market going positive. Turnaround Tuesday, baby. Working. Turnaround Tuesday in bond yields. Turnaround Tuesday in dollar yen. Turnaround Tuesday in the stock market. Turnaround Tuesday in the carry trade. So again, this dollar yen looking like it broke the downtrend. As long as we don't take out this 104.50, dollar yen now looks like it's going higher. I can see dollar yen getting tonight to 106.50. That's an easy spot for it to hit. The daily chart right now, as we look at it now, it's too early. Obviously, the daily chart's going to close at 5 o'clock in about 2 hours and 20 minutes. I'm on my way back to Miami, no worries. But when we take a look at this chart, let me delete all the lines. Look at that hammer. That is one beautiful looking chart. Dollar yen now I think is going to rally probably up to 107.50, especially if the dollar continues to rally. Dollar Swiss also looks like it completely reversed today also. Take a look at dollar Swiss. So this dollar yen now could get up to 107.50 easy. The Swissy, let's do sterling dollar first. Hourly chart on sterling dollar. I mean, sterling yen is just exploding right now. Sterling yen is just exploding. Euro sterling collapsing. Sterling yen has gone up 300 pips, I think, since the FOMC rate no change. Look at this sterling dollar. Go. Wow. Hourly chart. Again, this is all euro sterling related. Hourly chart is flagging. The only big thing with the hourly chart, though, this is typical cable. They broke it down to break it out. So it made a new low, right? It made a new low, and the freaking new low was the buy. Sterling dollar is classic. It does this all the time, sterling dollar. But looking at this chart, on the hourly chart, it does look like a flag. It does look like to me, if we take out to the upside, this whole, I guess, 179 level, it'll be bullish. But I got to tell you, with the dollar being strong, with the carry trade being strong, cable's going to be a short. But you just got to sell it into strength. You don't want to sell cable into weakness. If the carry trade is rallying, right now the stock market looks like it totally bottomed. AIG saving itself after the close would be, if AIG comes out with a resolution, if they find the money, carry trade's going to rally, S&P is going to rally huge too. I think they're going to come up with a solution tonight, and I think the stock market will probably gap up tomorrow if they do. So you want to keep your eyes on the tape, and if something happens along the lines that saves AIG, I think we're going to get a big carry trade rally here. Looking at the daily chart in sterling dollar. Oh, I got 3 minutes. Let me move. Daily chart looks terrible. Took out previous day lows. Unless we get over 80, sterling dollar looks like a great short. Euro sterling, one of the most important pairs to trade. I'm doing a webinar on Euro sterling for premium this Sunday, so you might want to go premium to get that webinar, baby. Looking at this daily chart of Euro sterling. What a reversal. What a day. We take out 79 and look out below. But this 79 level is a huge line in the sand. If this euro sterling were to break there, I could see us going to 78 easy. We have massive support. Damn it. Come on. Massive support at this 78 level, a little bit below it. No, right around 78. Yeah, a little bit below. So I think if euro sterling gets down below 79, we're going to get to 78. And then we break through 78. If you've been listening to mine for a long time, that 78 is a huge level. Sterling yen took out previous day lows, closing right now at 188. That would be green, blue on the day. Unbelievable movement in sterling yen today. They gapped it down on the rate decision only to bring it right back. Do I think that was the bottom in sterling yen? Well, we thought it a couple of times and it went up, but then it rolled over. We'll see, but certainly on the hourly chart, oh my bad, it only rallied 200 pips. On the hourly chart, I certainly could see sterling yen rallying to this level on the chart. You see here, this top of the channel here. Sterling yen on a big bounce, 193. And short term, we see here, if sterling yen breaks this downtrend channel, which I think it pretty much did. Yep. Well, no, it stalled right at that downtrend channel line. So we get through 188.50, and there's a resolution in AIG. Buy it and go somewhere, because you'll be up 400 pips within 24 hours. Euro yen, let's look at the hourly chart there. With euro sterling going down, this euro yen is not going up as much as it should. We'll see that probably abate. But again, it looks to me like, listen, gold's lower, oil collapsing. Bond yields came back a little bit, but they've collapsed also. 344 in the 10-year. They were 330 this morning. And the stock market's going to probably close stronger. So all this is carry trade bullish. And this dollar strength is probably going to continue. Andrew Spanton, voice of Forex. The only voice you'll ever need in Forex that makes you money. Premium, email me at info@globalfxradio.com.